The profit and loss account is probably the most important financial statement, because at the end of the day you need to know if you're making a profit or not when you're in business. It's important to manage cash, but if you're not making a profit, very quickly that cash will run out. So just going to take a few minutes to explain the basics of a profit and loss account. Profit and loss account has generally got 5 key areas. The first is the sales. So what is it you've sold and what's the value of that? And from that we deduct cost of sales. And that's generally a direct cost. So if you were a retailer, it would be the cost of the stock that you've sold to your customers. We take cost of sales away from sales to give us the gross profit. And then when we're doing our monthly or our annual accounts, we take off the overheads. In some cases you might not have any overheads, that might be your profit. But most people, if they run a business, will have other costs. That could be rent, it could be rates, it could be a telephone bill, it could be a mobile bill. If you're working from home, we can get the cost of some of your electricity. You'll have travel costs if you're meeting people for coffee and you're talking about business. There's a whole host of overheads that we can deduct from our profit, from our gross profit, to arrive at the final figure, the net profit. And hopefully it's a profit. It might be that you've actually spent too much trying to create those sales and you made a loss. But doing this calculation means that you know where you stand. And whilst most people will do this once a year, and often about 8 months after the end of that financial year, my advice, our advice at Freelance World, would be to do this every month. Because then you know where you stand, and if there is a problem, you can deal with it there and then. You can cut back on some of the overheads, you can cut back on marketing costs, you can cut back on spending money on coffee and travel and so on. Focus on generating sales and making a profit, maybe increasing your sales price. You can actually do this on a transaction level on each individual sale. You don't have to take into account overheads, but you should know what it's costing you to make a product or to deliver a service, and you should know that you're actually selling it for more than that. This is actually something you should go through when it comes to building up the price of your product or service. Make sure that you're selling it for more than it's costing you to make or deliver. But in its simplest form, sales minus cost of sales equals a gross profit. Take off the overheads, and that leaves you with your net profit at the end of the day. That's a profit and loss account.